In this video, we are going to show you how to use the double top and double bottom to read market structure and find trade opportunities. As always, make sure to turn on the notification bell so you'll never miss a setup breakdown like this one. The double top. This price pattern occurs at the end of a bullish trend to signify a possible trend change into a downtrend. Here is how it works. In an uptrend, price forms higher lows and higher highs, breaking above key resistance levels. The impulse move indicates active bullish strength, enabling price to cross and form new higher highs. The reversal down shows that when price got to this point, sellers got in and pushed price down. So, when price returns, buyers will use the level as a take profit point. If the majority of positions are closed at a level, price will stall and react to the key resistance. This presents a selling opportunity, and if enough sellers get in, the trend will reverse. This is where the double top comes in. This low, also known as a neckline, represents a buying point, an area where buyers will look to enter long to push price higher. A move closing below indicates buyers fail to turn price around, meaning sellers are in complete control, so you can enter short on the neckline break to ride the momentum down. If you're learning something new already, go ahead and hit that like button. It really helps out the channel and tells us to make more videos like this. It's the same process for the double bottom. When price is trending down, only lower lows get broken. Therefore, this low failing to close below indicates a loss of bearish momentum and the start of a trend change, because it's only in an uptrend where lower lows remain intact. This high gives us the neckline. This close above, creating a new higher high, confirms a shift. Do you prefer trading pure price action or using indicators, such as the MACD indicator? Drop your thoughts below, and we will work our best to create videos around your requests. Now let's find trade opportunities using the double top and double bottom pattern. Starting with the neckline break entry. Price goes up, forming higher highs and lows, indicating a bullish trend. This pullback gives us key resistance. For continuation, price has to break above this level and form a new higher high. But in case price forms a candle color change in sidebar, rejecting resistance, this pattern combination shows buyers close a majority of their position size at the level, giving sellers an opportunity to push price towards this key support neckline. This close below confirms a double top, and as we now have a moving downtrend, you enter short at the close. Now, entering at a neckline break is fine, but a more secure way is to wait for the pullback trade once the neckline turns into resistance after the lower low forms, confirming the shift of structure. Price comes down, forming lower highs and lower lows. On this push to create a lower low, sellers could pass this low, giving us a double bottom. Seeing the loss of bearish strength, you start to look for reversal patterns. Surely enough, after the same low, price broke above the neckline, forming a new higher high. So you start looking for long trades on the neckline. A side note, neckline trade entries occur in similar fashion to trendline or key level trade entries. Therefore, you'll use the same entry criteria even in this trade. Make sure to subscribe and turn on the notification bell so you never miss an upload. When price comes down, you wait and see if you get any reversal patterns to signal the end of the pullback and the start of the trend continuation. The shrinking candlesticks forming above the neckline show price is slowing down. The bullish momentum candle engulfing two bearish candles indicates newly added buying momentum. So at the close, you take your long entries to ride the momentum up. In this uptrend, price formed higher lows and higher highs before consolidating after reaching this price point. This phase indicates infighting between buyers and sellers, and the side that wins will be the one price breaks out from. Knowing this, you use this close below as a bearish signal. These highs give us the double top. The low gives us a neckline. Again, instead of taking the break entry, you wait for the pullback trade on the neckline. After forming this low, price pulled back and formed a candle color change in sidebar on the neckline. This candle indicates the start of the trend continuation, and you can use it as an entry signal. This impulse move closing below this low shows you price is going down, so you'll be taking your entry short. This reversal not making it below this low shows you price might be reversing, so you mark this as consolidation. This close above the neckline, forming a new higher high, confirms a shift. So you draw your neckline from this high, and after the multiple low wick candles, you take your entry long on this bullish candle. This setup also had a second entry point, which came after break above the downward trend line with yet another bullish momentum candle. This was a high-quality double bottom setup, as the second head was already a higher low formation instead of it being an equal low. In this setup, we'll show you how we use a higher quality double top as entry confirmation in the recent Bitcoin sells we took. This is the Bitcoin chart on the daily time frame. These reversals give us a key level. This move down on the third touch validated the key level. So, when price failed to cross above, forming the candle color change in sidebar, rejecting resistance, we knew we would be getting another move down, but couldn't tell when on this time frame. So we had to go to a lower time frame. On the left is the daily time frame, and on the right is a 4-hour time frame, where we found the double top. This resistance is the same as the one visible on the daily time frame. The multiple long wick candles on the daily are represented by this consolidation on the 4-hour. And just like we did in the previous examples, after the break, the level formed on this low became new resistance, also known as the neckline. After this low, price pulled back and formed the inside candlestick pattern, rejecting the neckline. From the previous examples, this would be the entry point. But since this trade had the daily confluence with the 4-hour moving downtrend, it was okay for us to enter the trade before the bearish momentum candle, which would have been a late entry. So after this candle, we moved to the 1-hour time frame to get a trend change. Notice how the 1 hour depicted the double top clearly. This is the same neckline as the one on the 4-hour. Here on the 1 hour, price formed another double top, with a lower low reacting to the neckline. We then drew the trend line connecting these lows, and on the break below, we took our entry short.